to the Breakfast Leadership Show, where we interview global thought leaders on business, leadership, and life. Here's your host, keynote speaker, best-selling author, and chief burnout officer of the Breakfast Leadership Network, Michael Levitt.
Welcome back. I got Bronson Hill on the line. Bronson, how are you?
I'm good, Michael. How you doing?
I am good. I've been looking forward to this one for a while now, so I'm glad that the day finally showed up and we're here. So why don't you share a little bit about you, and then we'll jump into the conversation.
Awesome. Great to be able to chat today. And so my background, I was a well-paid medical sales professional, was making over 200K per year. Realized, like a lot of people that are professionals or business owners, that I really didn't have time freedom, right? A lot of people say they want financial freedom, but really it comes down to time. And so was able, through a process of learning about real estate investing, passive investing, just different types of assets I could get into. I was able to leave my corporate job a few years ago, get out of the golden handcuffs, and just really be able to replace my working income with passive income in 3 years or less. I guess that's the title of my book, is Fire Yourself. So how do you actually fire yourself? So that's what I love talking to people about. So now we've raised about $50 million from different investors, and to buy different assets that cash flow, have appreciation or tax benefits.
People always need a place to live. That's not gonna. I don't think AI is gonna fix that one. It's like I live in an AI house. It's like, okay, yeah, well, let's see. I mean, I say that tongue in cheek. They play this back 50 years from now. Like, look how naive they were. But my hunch is, no. I think we'll still need the physical aspect of that. And kudos to you for recognizing, because obviously the six figure successful career in medical sales, and medical is another industry that's not going anywhere. People are going to need supplies and everything else. So it was obviously a situation where you recognized, you know what, this is great, but I don't have the time that I want to do the things that I want to do. And you see that too often with a lot of people. They make a very decent income, but they, like you said, it's they're money rich and time poor, and they go, is this all worth it? And that's why you see so many people go, what, I'm done. I'm just going to go do part-time whatever and take a step back, because they recognize that it's the time that is worth so much. And so, how did you venture in? I mean, obviously you did the research and all that, but how did you land into, the type of investing that's made you so successful?
Yeah, well, I think we all kind of know deep down, we know somebody that's done real estate and done very well, or done a business thing and done well. So, we know kind of generally what people do to get wealthy. It's just what's step one or two. So with real estate, it was like, okay, I'm going to buy. We do, a lot of people did or would do, and it's buy a rental house or a vacation house, and then buy a few more. And then I realized pretty quickly that it wasn't really generating much cash flow. Even especially today, buying any homes to rent out, it's very difficult to find anything that's really cash flow positive, meaning that the mortgage is actually covered by the rent. So a lot of them, like where I live in California, it's almost 2 to 1, where you're paying twice as much to own with your monthly payment than you are to rent. So it's hard to be a real estate investor right now with single family. But I realized when you went after bigger deals, so whether it was apartment buildings or other types of assets, there were things that actually made a lot more sense. So for me at the time, this was a number of years ago, went after apartment buildings. And there's a saying, when the student is ready, the teacher appears. And I have a cousin who had been doing this for years, and just kind of a cousin I wasn't really in touch with, but saw him kind of randomly. And he's I told him I plan to get all these single family houses. He said, why don't you consider doing multifamily apartments? And I said, really? I said, I don't have the money. And he said, well, you can raise the money. And so I learned about raising capital. So that was really helpful. And then I realized, kind of on the flip side of that, Michael, there are a lot of people that have a money problem, where they have, not that they don't have money, but they have money, and they don't know, okay, if I sell my business, how do I actually live off of this? Or if I retire, how do I make money when I'm not working? Because stocks and bonds and other things, they just don't provide it. And for a time, I was an investment advisor on the side. I was doing that. I realized, like, there's just this huge misalignment of interests. And so when I got this, single family portfolio, had 4 houses, was basically creating another full-time job for myself. And that's really the test of, is the investment that you're doing actually passive? And so people will say, I'm doing passive investing. I own rental houses, or I'm doing an online trading strategy, or I have an online business. Well, none of these are actually passive because the more you grow, the more time it takes up of yours, right? So that's really the test. If you were to 10x what you're currently doing, if you have 3 rental houses, if you go to 30 rental houses, did you, even if you have a property manager, didn't you just create another job for yourself? And the answer most of the time is yes. So there are deals, and this is really the quote that I love that my book is based on, is Warren Buffett, I think our generation's best investor. He said, unless you learn how to make money while you sleep, you'll work until you die. So a lot of us as business owners, we're great at making money, but what about when we can't make money, or if something happens to a family member, or God forbid we're disabled or whatever? Do we have money coming in through something that we know how to actually generate capital without our own efforts or the efforts of our own work?
I think that's so important is, and I love the Buffett quote, it's true. We're trading time for dollars. And if we can somehow make, a decent ROI, and multifamily is definitely, the way to go because, building, single family homes, not only from, a rental side of things, as you spend so much time managing all of that, and the ROI isn't what you want, and the cash flow is suspect, and you're one tenant away from, oops, now I got no one's renting right now because the price of rent is too high and you don't have somebody in there, and all of a sudden you're on the hook for this mortgage on top of the one you already have for your own place. And next thing you know, you're like, oh geez, this is not working out. Where the multifamily, quite frankly, is a much better option because apartments don't tend to stay empty unless they're in a really rough area, and even then, they tend to be occupied most of the time. And as crazy as it sounds, it's a whole lot easier to pretty much manage a property with multiple units than it is with just a single family. You're on mute. I'm sorry.
I was having a good conversation there, I guess, by myself apparently, but
Uh,
that's the reason I wrote the book Fire Yourself. Really, it is became I'm a #1 Amazon bestseller for the category of real estate, and it really is just a guidebook of, hey, how do I get started? I know I should be doing this. How do I don't know where to start. Who do I need to meet? What sort of events or what sort of deals do I need to look at? And it really gives a framework, not just for, because we started with real estate and with apartment buildings, and we shifted to do private equity. We're doing oil and gas deals. We're doing car washes. We're doing debt funds, which are another real estate type asset. We're doing, actually buying private businesses. And so I think that as an investor, it's great to be able to be nimble, because I think right now, honestly, in 2025, most real estate deals are very challenging to pull off. I think because of debt being higher, because prices really haven't recovered, rents haven't really risen. But there are other assets like oil and gas that provide incredible tax benefits. They're one of the almost magic bullets that people can potentially reduce, no specific tax advice, but potentially reduce ordinary income by investing in these types of assets, right? So I've seen people wipe out, huge tax bills for this year by doing stuff like that. So some people that are professionals, that's their concern, versus others, it's like, I just want cash flow. I just want to have money coming in every month, every year, kind of have a steady stream so that, I don't necessarily have to fire myself, but I can if I want to. And that's really the thing that a lot of people don't realize, that we're one injury, one bad break in the business, one, reorganization away from needing to have, okay, what am I going to do here? And I think with AI and all the things like you said, when you own assets such as real estate, such as a business, such as a brand, such as these types of things, you can't just simply like technology away these things. And I think a lot of jobs and a lot of businesses, there's so much change happening now. I think the more actual assets you own that can put money in your pocket, the better off you are going forward.
Yeah, it's a good investment strategy. And again, we're not providing investment advice. We're just having an investment conversation. People, do your own due diligence, invest wisely, and all of that. But real estate is one of those arenas that, time and time again, last time I checked, we're always going to need a place to live. And again, as I see in certain markets, especially booming markets, you see a lot more, condo buildings and, other things that are being built. You don't see, oh yeah, they're building a brand new subdivision of single family homes. I mean, you don't see those very often. I mean, depending on where they are, but rural parts of, America, sure. But in the most part, you're seeing multifamily units, and because, from a building standpoint, from a contractor standpoint, from an investing standpoint, again, people look at it and they go, okay, this is going to be like you said, a steady stream of income over a period of time, and it just and and more predictable, quite frankly. Um, as far as maintenance is concerned, yeah, you're gonna have the anomalies. Maybe the HVAC system goes out or something like that, but that's gonna happen over time, and you can plan for it accordingly. But in a house, or a leaky roof or busted pipes or things like that, again, you gave up your 9 to 5, and all of a sudden you're like, well, now I'm the maintenance guy, like, okay, or I got to hire somebody to do that. And you just see, that revenue stream, as you discovered yourself, just get smaller and smaller. And I look at people that, are doing that, and I'm like, well, I mean, if you love doing it and you're really handy at it and all that stuff, and it gets you out of the house or something, that's fine. I have a family member that, rents a home, and, it's a husband and wife that own the thing. And, the husband's the handy person. And he said he loves it because he gets out of the house. He likes doing it. And I was like, well, I don't want to go in the dynamics of that relationship, but, there are people that like that. That's fine. But as far as, are they retiring, or are they going to be in their 60s and 70s and have to go fix, busted pipes and stuff? I don't think
Yeah.
a lot of people want to do that. Where, this model that you talk about, and obviously the various models that you briefly mentioned there a moment ago, again, uh, diversify and, get different revenue streams coming in. So what happens when you do that is, doesn't matter what's going on in the market. There might be some sectors that do better than others during certain period of times, but when you're diverse, guess what? It flows no matter what. It's like, okay, yeah, we get a little bit more from this one, maybe a little less from this one, but at the end of the day, it's all about cash flow and, again, getting more time back.
Exactly, and that's really to your point. I mean, for the couple that's doing the work, and I've talked to people, and they're like, "Oh yeah, but I'm getting a 25% return per year or whatever." And I say, "Well, are you valuing your time? Are you actually valuing what you're doing?" And the challenge, that what happens if people want to retire? And I had a conversation recently with someone, and they said, "Hey, this is just all new to me. I've done it where they were a real estate person and they've managed their own stuff themselves. Their dad was like that." And I said, "How was that for your dad?" And she said, "Well, just my dad was always gone. He was always doing this all the time. He never trusted anybody." And I said, "Well, how, like, is that what you really want for your life?" And she's kind of like, "Well, no, I want to be able to have actually time freedom." And so, like you said, there's people who enjoy it, but if you're really looking at it as a wealth, creation, wealth preservation tool, I think that you really need to look at what are the actual returns on your time, and is this actually something? And I will say this: there's no such thing, Michael, as fully passive income. And the reason why is because no one really cares about your money the way you do. So you can't fully delegate that to somebody else. Maybe you have an investment advisor or whatever, and I can get into, why I don't think investment advisors in a lot of cases have your best interest in mind. But I think in general, if you understand what you're doing, you do work on the front end, you're able to understand what the deal is, what the risks are. If you don't understand, hey, here's the ways I'm going to make money, but more importantly, here's the one or two primary risks of the ways that I could lose money, then if you don't really understand those things, you probably don't understand that. You haven't looked close enough. You really don't understand it well enough. And even Warren Buffett, one of our best investors ever, has said, "I don't invest in things I don't understand." And so I think it's really important to find out that you understand it. And so you're doing your work on the front end. And then you choose to invest with a group. There's groups like ours, or there's many groups out there doing this. And then you basically are at a hands off, that you're not taking the calls, you're getting reports, you're getting updates, but someone else is doing the work, right? So you're getting that, what we call mailbox money, right? You're getting that money that shows up every month, every quarter, consistently.
Reminds me of a story of somebody that I know that was in, multi-unit investing and things like that, and had several deals, and, made a ton of money. But he had one deal that I'm not going to go into any details or anything like that, but it did not go well. And, a lot of legal matters got involved, and, had to settle and all that stuff. And it was a pretty big chunk settlement that he had to cough up for this. And not to scare people on that, but it hammers home that point where it's like, yeah, I could do this and this. It's like, not to be negative, but okay, what could go wrong on this? What's the risk factor in this? And as an investor, you need to know that. And I think that's where a lot of people, uh, especially when started make it easier to trade stocks on your phone and things like that, or digital currencies and things like that. A lot of people got burned bad because they didn't understand the risks. They didn't know about stop limits. They didn't know from a stock or investing standpoint. They didn't, or they went, "Ooh, margin, I like this," and then I get to buy more, and all of a sudden it tanks, and all of a sudden they say, "Hey, you owe us this," and you go, "Ooh, I don't have that in my account," and they go, "Hey, you owe us this," and all of a sudden that's a really bad situation, and there's always risk involved when it comes to this kind of stuff, but the more and again, this is where you had a mentor when you entered the space. It's good to have mentors that have been there. They'll share the stories. They'll say, okay, there's this and this. It doesn't eliminate the chance of something going bad, but it helps mitigate it because you'll learn what to look for and what not to.
Yeah. There's one thing I wish I had known. I think when I started, I think this is a kind of a shortcut for this that I think everybody listening, that if you're like, hey, I'm interested in this, you mentioned a mentor. I also think of having peers. I think that the transformational relationship when it comes to investing is finding other investors that are not pitching anything, right? So in finance, you're aware of this if you've been around business finance for a long time. Everybody's kind of selling something, right? I mean, myself included, we have deals. We want everybody to do our deals. We think they're great. But when you you go to a meetup or a conference about investing, and that's where it's worth investing your time, right? So you invest your time and you educate yourself first. You get in the room and you find someone else who's been doing this for 15 years, and they're like, oh, here's my worst failure. Here's my success. Here's the group. I would work with these guys all day long. These guys I would watch out for, right? That person is not trying to pitch you anything. They don't have a dog in the fight, except they want to share information. They want to do really well with their investments, and they want hopefully you to do as well as well. So those are the things what most people I find that are busy professionals, business owners, they don't take the time to go get in the room, whether it's paying to be in the room at a conference or going to a mastermind. We actually have a mastermind for high net worth investors that we gather once a quarter, and we just have conversations. We have virtual calls as well, just to kind of get people in the room to have those conversations. And again, that's why I call it transformational, because the conversations are great. It was like, here's how I made $1 million. But if somebody says, well, here's how I lost $1 million in the deal, well, that's an even better conversation, because they're sharing kind of that behind the curtain Wizard of Oz moment where you can really see what didn't go well, right? And these people, there's no agenda there. There's nothing behind there except, hey, we want to share information. So that's where I think is really the shortcut for people that really do well in this.
Yeah, it's important to talk with people, and those people, want to share, because they want people to be successful. They figure, hey, if I can help somebody avoid the pitfalls that I did, guess what? I just made something better for them. That doesn't mean that that individual is not going to have their own pitfalls. So guess what? You pay it forward and you do the same thing, and you share your knowledge years down the road at the conference and help people. So I see behind you, you've got your book, and I know you're working on another one. Why don't you talk about that?
Yeah, so I wrote the first book, Fire Yourself, just as a guide for all these conversations I've had with people. The doctor that's worth, $3 to $5 million is only invested in stocks, or as a money person. Just how do I get started? And that's really a guide for that. And then in the midst of all these conversations, thousands of conversations with high net worth people, I realized that, Fidelity Investments in 2019 had a study that came out, and they found that 86% of millionaires are self-made, which is very contrary to the common belief. Most people, you kind of poll people in our society, most people believe, about 60% of people believe that people became wealthy because they inherited or they had advantages to help them get that wealth. But 9 out of 10 people actually learn and they figured out a way to do it on their own. And so it's actually very opposite. So I think that, for this, that there are some mindsets around wealth. And so I decided to write a book called Rich Brain, which is how the wealthy change their brain to change their bank account. So a lot of times we don't talk about mindset enough. Tony Robbins, the motivational speaker, talks about 80% of success in life is just having the right mindset or the right psychology. So this is just, a lot of people don't realize we're actually saying no to business opportunities. We're saying no to wealth. We're saying no to relationships without us knowing we're self-sabotaging. About 90% of us have self-sabotaging behaviors. So this book kind of talks about identifying those, really seeing ourselves as a person of wealth. I talk about something called wealth worthiness. And again, this is a book, I wrote it and then I realized I was doing too much, and it's going to be a series. So I'm going back and rewriting the book, but hopefully later this year, 2025, I'll have it available. But I'm very excited about that book.
Yeah, when you got to the point where it's like, wow, this is starting to make Tim Ferriss's Tool of Titans look like a paperback book. It's like, oh, I'm gonna have to. They got more. There's more meat to this. Okay, this is gonna be a saga, which is good because
Yeah.
there's a lot to unpack, but I love that stat because yeah, a lot of people think that you must be related to a Rockefeller or something like that. That's how you got your money. And like, no, you started with an idea and a concept, and napkin notes and who knows what else, coffee stained or beer stained notes, whatever, and all of a sudden you go, okay, now look where I'm at. And again, that's those organizations that have and individuals that have done that, again, those are prime candidates to do, the type of investing that you help people do because building that up, I'm sure a lot of it was, time and effort, but in many cases, maybe they recognized, oh, wait a minute, it's investing in passive income is the way to, expedite your revenue streams because it frees you up to do, other things or I'm a big fan of giving yourself a lot of elbow room and space to basically, dream pie in the sky kind of ideas. Because when you're relaxed and you're not worrying about, okay, how am I going to cover this or that? I know revenue's coming in. Then you have that freedom to go, I wonder about this. Well, maybe I could go into this market or I could do that. And if you're working like a crazy person, unfortunately, a lot of times your brain won't allow you to even have those types of thoughts because to touch and point, or touch on what you said before. It's your mindset. You're self-sabotaging and preventing those ideas from coming to mind because you're overwhelming yourself with too much work.
Yeah, exactly. Yeah, it really is amazing how we go with this subconscious kind of operating system that we don't think about, and yet it affects everything we do. A lot of times, it's just what happened in the past, what people said to us, and it's absolutely changeable. And I can get into so many examples, but I'll save that for the book. But yeah, I think it really is something. If you're not investing, I mean, it's been said, your success in life will never exceed your investment in your own personal development. Right. So if I'm developing myself, whether it's reading books, it's working on mindset, it's doing affirmations, whatever these things are, these things have exponential effect. And I've seen it again and again in my life.
Yep. Yeah. Same here. So, Bronson, love this conversation. Where can people find out more about you, your book, and everything else that's going on?
Awesome. Well, thanks, Michael. I appreciate you having me here. I have a free gift for your audience. It's basically my 3 favorite investments of 2025. So cash flow is a thing that we're really after right now, which is hard to find in a lot of investments. So I talk about my 3 favorite ones, and I won't even mention what they are, but this is a guide. It's the Mailbox Money Blueprint. So if you text the word it's about 10 pages. You text the word cash flow, just all one word, to the number 33777. So text the word cash flow to 33777. It will ask for your name, your email. It will send it to you right away. And then it will basically get you in touch with kind of what we're working on, our future deals and things like that as well.
Awesome. Thank you so much. I'll have that in the show notes and I appreciate you giving that to people. I highly encourage they text and get that information because I'm all about giving people a lot of time freedom, which gives them financial freedom as well to do what they want, where they want, and when they want. That's success in my definition. So again, Bronson, thank you so much for being on the show. Really appreciate you.
Thanks so much, Michael. Appreciate it.
Thanks for listening to the Breakfast Leadership Show, part of the Breakfast Leadership Network. Visit breakfastleadership.com for tips on empowering your business and your life.